Well, there's been some wild accusations being thrown around about strategy and Michael Saylor being the biggest con man on Wall Street and that the strategy business models were akin to a Ponzi scheme. Is this true? Is it fair? Well, so time will tell. And I think 2026 could be the very telling situation, but we need to look out for the signs. So what are the signs? Well, let's look at the business model first of all. Really, since 2020, they've been accumulating Bitcoin on its balance sheet as that treasury entity has come through. And they now own 650,000 Bitcoin on its balance sheet with a current market value, or what we call a net asset value, of around just under $60 billion. And to do that, they've really essentially been guided by market forces, and market forces have been very supportive. You need a situation where the market cap of the company is trading at a sufficient premium to the net asset value, so the common equity shareholders feel validated and compensated for that risk, and effectively over time they can buy those essentially free to them from the market in that situation. But what we've also seen is the capital structure changing as well. We've seen 6 different tranches of convertible notes being issued through that time, equating to just over $8 billion. And those convertible notes will pay semi-annual coupons coming through. We've also seen just over $7 billion of preference shares being issued, and they rank senior in the subordination to the common equity as well. They'll be paying quarterly dividends in that situation. And so the concern for the market is if we see further stress, will they be able to meet their debt obligations? It's something that Peter Schiff has come out and said that they failed to do, and they may have to sell their Bitcoin because the market forces won't allow them to come to market. But if we actually look at the correct valuation metric, which we need to look at in 2026, when we get closer towards that payment, which they'll be able to make because they've got a 1.4 billion reserve. But what happens after that point? That's going to be the big point that could put real stress on the equity. And at the moment, we've got about 40% of the float being sold short. So people are speculating this could continue to go down. The right metric you need to look at is the TEV relative to net asset value ratio. And so if we look at that with its market cap plus the preferred shares plus the convertible notes, that comes to around $69 billion, which trades at a premium to the net asset value, the value of Bitcoin on its balance sheet. So if we came to a situation in its current climate, if they needed to raise cash to fund more dividends and interest payments, that'd be okay. I mean, I think common equity shareholders would be okay funding that situation. But what happens if that ratio falls below 1? Well, that's where things get real, and that's where markets will speculate that they may need to sell some of their 650 billion Bitcoin on its balance sheet, which would not go down well at all by the market. That is going to be the big thing. So they'll make their next interest payment, but what happens after that point? That could be a massive moment for the Bitcoin. It's not going to happen straight away, but the Bitcoin price will tell us what's going to happen. And I think MicroStrategy could actually move the market going forward. Trade with Pepperstone.